Hello and welcome to the new episode where we will talk about economy and the market's current situation. A lot's been going on recently. Last night, actually, there was this US interest rate decision, which was no surprise, stay at 5.5%. But the surprising part of it, probably what you have already heard a lot in the news, and basically everybody who is talking about the markets and finance in general have mentioned that this decision was, of course, quite understandable and forecastable, and it was no surprise. But a little surprise was actually the speech afterwards, where Jerome Powell actually said that they don't see yet that quickly to reduce those interest rates. So monetary easing is not yet to be decided, is not yet guaranteed also for the next committee meeting in the March, and also even for the next after the next one into the May. So basically, if we do not see those interest rates decreasing in March and also even in the May, then definitely we will go slightly into the recession. Also, there will be impact into the traditional market, stock market, and indices. They will be going down. What's not gonna be going down, then it's US dollar, which will stay strong as it is currently too. But still the most likely scenario, if we look to those forecasts, then the most likely scenario is still that we see also this decrease for the interest rate. Let's see where these projections are. Here we see that in the March there is still larger chance for 0.25% decrease than actually staying on the same levels as we are. So, and then also in the May we see that there should be at least 0.25% decrease. Those numbers and those percentages mentioned here are quite changed since yesterday, and that we see that the interest rate will stay basically for the longer and will mean more impact on the economy will take place. Also, I think the inflation will slow down even below 2% target, and there will be a little more chance for a recession coming up this year. Then I have prepared also some material which is coming out of it, as we see that basically these mortgage applications to buy a house in January 2024 is nearly on the lows of, let's see, 30-year low. Basically, there haven't been so low situation with the new mortgages for the houses. So that means that real estate will be going down, the new home sales will be going down, the new building permits emissions will be going down. Basically, that means that also overall economy will continue to slow down even more. Then the next thing is also this guy, which is famous as the Black Swan author, Nassim Taleb, says the US is heading for the death spiral. Yeah, but of course, when there is like shaky times and a downside potential, then also those who are mentioned such things are coming up more and more, than a lot more than those who are looking for the very bullish patterns. And then what I wanted to mention also, that there is currently differences between the total balance sheet of central banks and actually the MSCI World Index. And that's previously it has been going sideways, side to side. These things never been like too far away from each other, but recently there have been large decoupling, and this decoupling, it's for sure won't stay for a very, very long times. That means that basically this signalizing also that the stock market might be going down this year. So that's for the down movements and also for the bearish sentiment. But what actually that means for the Bitcoin and Bitcoin price? For the Bitcoin, yesterday, as we see that the decision was around 9 p.m. European time, and at 10 p.m. we see that there was slight decrease in Bitcoin price, and we might see more in the coming weeks, maybe in coming months. So we might not see price reaching new highs currently, as ETFs is launched and halving is still to come into the April and not yet into the February. So that's about the Bitcoin current situation. It's, I would say, a bit more bearish than bullish in the short term. In the long term, definitely bullish. Then I would like to also show you what actually our AI Invest Labs robot is currently doing. As we told you before, that this long trade was superb and took home 56% profit. Currently, there is the short trade open. This is still open, and those fluctuations up and down doesn't make a difference. So that's the good thing about this robot, that those short-term fluctuations and manipulations do not make losses for us. This is a brilliant thing about this tool. We do not react to those small-term manipulations. That is the strong part of it, and that's why I still see that also the next trade can easily be profitable if we go down to those regions of 36K previously mentioned ones. I also still have them here. So if we go down to this zone, also the short trade will be profitable, and then we can see for the halving and coming months and year after the halving, we can see also the next long position into the Bitcoin from the robot. So that's about the Bitcoin chart, but there is more to say about Bitcoin currently, because this is the estimated year one ETF inflows impact on the Bitcoin price estimated by Galaxy. And they say that actually this first months might be around 10 billion, then 9, and then slowly decreasing up to 6 into the December. We'll see the real impact and we'll see the real numbers in the end of the year, but that's the forecast currently. And if it concludes, and if it turn out to be right, then basically the estimate is that the price for the Bitcoin increases 74% this year. So, and that's also almost doubles the Bitcoin market cap, and also Bitcoin comes a lot closer to the market cap of gold. That's definitely the bullish sign for the Bitcoin. What else I would like to mention regards to Bitcoin is actually these metrics which are still in play, and I don't see them going a different way. This logarithmic chart is still on play. The halving is coming up shortly, and we don't see that we are decoupling from this actual chart. So therefore, I see still quite likely to have Bitcoin on the prices from the 100 and even more in the next bull run, in the next stop of the bull run. So that's about Bitcoin. let's see what we else have for you today to show. And that's also the actual market depth and also level 2 market data, which is still important to look at, especially for the derivatives accounts and for the futures. Let's see, where is the Bitcoin chart? That is what we need. So if we look to the volumes where are the limit orders standing, then we still see that there is a large volume standing at 35K, and it means that still this game down to 35K is quite likely to happen, as we see that there is not a lot of sales volume upwards from the prices where we are standing right now. So that being said, in resume, I would like to say that we are still in the short term a little bit bearish for the Bitcoin. In the long term, very, very bullish for this halving cycle, very bullish with the price targets at least over 100K, probably 150. We'll see in the next year or two. Because ETF, first thing, which will continuously growing inflow into the Bitcoin. Secondly, 90% of the Bitcoin is never sold; it's only hold. So this volume is not in a sale. Third, this quantitative easing still, I believe there will be at least one reduction for the interest rates this year. Maybe not in a March, maybe not in a May. But I believe still until the end of the year, there will be at least one decrease of the interest rates. So with that being said, we see that also this halving taking place into April. After the halving usually follows the bull run. That means that supply will decrease this year. Demand will continuously increase this year. And also that means bullish for the price. That being said, I would like to say that the Bitcoin price in the end of the year might be around 80K. That's very rough estimate, but let's see. I believe there will be a new all-time high this year, at least. All right, thank you for your attention, and let's see you tomorrow too.